Welcome to our weekly macro and strategy update. Today, I will focus on opportunities offered by the current sectorial rotation in global equity markets. The outcome of US elections has removed uncertainties linked with Trump's attempt to challenge the results. Meanwhile, Pfizer, BioNTech and Moderna could submit their coronavirus vaccine for approval before year-end. These elements are supportive for economic and earnings growth in 2021. This is why we expect the sectorial rotation in equity markets to continue. So, cyclical sectors will continue to outperform defensive sectors. With higher growth and higher yields to come, industrial should keep outperforming telecommunication, staples or pharmaceutical sectors. In addition, when yields are higher, value stocks usually outperform growth stocks. This is why we remain positive on the metals and mining sector, especially since it benefits from the Chinese recovery and higher commodity prices. We also decided to upgrade banks, especially in the US, because they will gain from the steepening of the yield curve. And we upgraded the hotel, restaurant and leisure sector, which will be the first recipient of the end of lockdowns. With that being said, we remain overall prudent regarding other value stocks. For example, Biden's administration policies on climate change and ESG rules will weigh on the energy sector or on airlines. Besides, value versus growth sectorial rotations are only short-term movements. Over the long term, growth stocks will outperform thanks to their higher earnings growth. This is why we remain positive on the information technology sector, because with the COVID crisis, it has benefited from the acceleration of digitalization. Thank you for listening and see you next week.